And the fun part is you did this on your own for 6, 7
Just
months.
did it. Yeah.
And then really one day you reached out and you said, by the way, I have this account and this thing, automated trading, that is up like 20% already. So maybe you'd like to take a look. And I'm like, sure. Hi, Buck. Thank you for speaking with me today. Let's perhaps jump right in. Can you tell us a bit about yourself, also a bit of your trading experience?
Yeah, so I've been trading probably about 20 years now.
Nice.
Started out in options,
Okay.
moved over to Forex for about 5-7 years, and then came back to options, and realized over the course of that time that trading volatility was probably the best way to go. Trying to time speculative trades and find where the market was going to move rarely worked out. I usually ended up wins, losses, and I ended up kind of flat. So it took me a while to finally realize that volatility is where you have a bit of a predictive capability. Yep. So that led me to earnings. Talking about predicting volatility, earnings is kind of an obvious choice there. And researching that online is what brought me to EarningsWatcher, because I realized that you need to start getting historical data if you want to find out where things are going to go, because things tend to repeat.
Exactly.
So that's how I ended up at EarningsWatcher. And after a few months of doing that, I realized that automating the trades was really the even a more optimal approach.
Yeah.
Because
so just to cut you there, you in your background also, I think you were a bit of a coder or programmer,
yes.
So you were comfortable in that field, and so
right.
Like you saw the effectiveness basically of having an automated system that would trade and use whatever edge you're using. And given that people, especially retail traders, often will have jobs and time commitments that doesn't allow. And the emotional part.
Right, and the position sizing. One thing I noticed I was doing was, if I had a good week, for instance, I would start upping the position sizing.
Yep.
And then that would result in a catastrophic loss, because statistically you can't win all the time. Exactly. But your emotions will start to convince you that you can. So I'm a software engineer, and I started thinking, okay, I need to just automate this. Take in the highest quality data I can, and then let the computer or let my software run these trades in a consistent manner over the weeks and months and years, so that you get that gradual increase.
Whatever any emotion comes in it, it can distort that process and lose the goal. And so as a transition, I was actually very happy, because so you reached out sort of on Discord during a random conversation to tell me about the system that you set up. Basically, so as a member, you have access to our API that gives a lot of things from our data and analytics, but you were mostly interested in these weekly insights. And so just to remind everyone, these are really basically picking from the upcoming earnings every week. And really, our models basically are driven by the numbers. And so scanning basically for each strategy, long volatility, short volatility, etc. Really what looks like the best names. And so you told me about this system that you set up. I'll let you maybe say 2 words about it. What did you end up doing, basically?
Well, I noticed that you had this API endpoint for downloading the weekly insights. And that kind of lit up my mind. I thought, okay, now I can write a software to pull down that weekly insight list. It's a JSON list, ingest it into a software, and then act on the data. So you've got well-defined entry and exit timing parameters of, an IV rush, you want to come in a day or two before, you exit just before earnings. That's considered long volatility. On the short volatilities, you're going to enter right before the earnings call and hope for that fall off. You're going short. On the runners, you're entering again right before earnings or immediately after earnings. So I set up a system to operate upon those parameters. So let me just share with my screen briefly here.
And so, just in terms of timeline, you basically started around what, April, May, or around mid last year, something like that.
Last year,
exactly. And so, just to summarize, you set up a paper account on your broker, so interactive broker,
right.
I think you're using. So a paper account basically linked to your identity account, etc. So basically, every week it grabs the insights.
Right.
The program understand what types of position for each strategy. So, and here again, you started with the, say, default approach of a straddle for long volatility, the short version of it, and you just basically send the order at the right moment. Perhaps let's start so that everything makes sense for our viewers with the interactive broker account that you that is linked with that. Great. Okay, so this is the interactive broker.
The account started at 100,000. Again, it's a paper account, and we're currently at 122,551.
Which is so a great performance. Okay, and so this is the account that executes different positions. The position come from this module trader workstation, so that imposes that we're seeing here. Let's maybe look at the module that executes the trades first, or that sends the trades where the parametering happens.
Okay, so we set up, this is some of the settings for the Insights Trader module. We have the entry window, and this is expressed as hours before earnings. So 54 hours to 6 hours before earnings is the entry window for the IV rush strategy. And we're going to exit 1 hour before the earnings announcement. So the close on the day before the earnings. Now, if it's a BMO, before market open, it's really going to back that out to be the close of the day before.
So that's the intelligence of your program that understands the different details.
Right. It knows about BMO and AMC. So it's an aftermarket close. It's a pure 1 hour before the end of the trading day.
What's really cool also, I see, is the allocation of the trade. I see you basically are following a 10% allocation rule for these trades. Okay, which also personally I think is very wise, where this gives you enough room to even go through losses that statistically will arrive.
It gives you some room to make a decent profit, and the losses occur, but they're usually balanced by a similar amount of wins. We also we have a stop loss percentage of 50% of that allocated margin, essentially.
Good. Okay.
Also implement a trailing percentage exit model, where if it starts to see the profit go up and then it drops, it'll exit the trade as a profit preservation.
It's pretty much your own implementation of trailing take profit, stop loss. Great. So you have the system set up, 10%, these parameters, and you just let it run. And the fun part is, without even actually telling me or one of the teams, you did this on your own for 6-7 months.
Did it.
And then really one day you reached out and you said, by the way, I have this account and this thing, automated trading, that is up like 20% already. So maybe you'd like to take a look. And I'm like, sure. Especially that I'd like to say that you perfectly fit in sort of what we like to see in our audience, where you understood that this is a numbers game.
You're not always available to do these trades, and timing is everything on these earnings trades. So I'm a father. I have a business. I'm not always available to maintain and enter and exit these trades. So automation is perfect. It's an obvious choice.
And so let's see that other screen you showed earlier of some of the past trades. And so here we see, for example, here we're looking at what we call a sympathy play. This is a type of strategy in a nutshell, where this is the benefits of earnings and all that volatility that you discussed about. This is like proxy volatility, basically.
This is the sympathy insight, which you added sometime in this is from November, so it was around October, November of last year.
It was quite recent. And so here the play was on Walmart. On November, I see the 20th BMO.
Here we had an exit because of the trailing stop. It detected a fall off, dramatic fall off in profit, and decided to exit early.
And so automatically exited for you there.
Correct.
Great.
We
So
shared around a $300 profit on
you have some IV rush above, some movers. So here, IV rush.
Here's an IV rush that
Great
again
example.
profitable. Yeah.
For our audience, quickly, IV rush is really the strategy before earnings, where we play the rush, so the implied volatility that sort of boosts leading up to earnings, and really last hours, last days. Here you see an example on DocuSign.
Just so everyone understands, what we're looking at is a chart with profit vertical on the scale and then time across horizontal. Yep. And then this dashed line on the right is the earnings point.
Great.
So that's where in time you're going to have that earnings call.
And so here for IV rush, same here for GitLab. IV rush exited before, entered and exited before. You see the rush happened basically over 2 days here, 2 days before to a day before for
Correct.
that. Here is a loss on a mover, so Okta technology that did not deliver, so the move was not, here is the loss case, and so again got triggered automatically after earnings, as we see after the line.
And this was, because you see this straight line, this is basically the overnight market open. Yeah. So the market open did an immediate stop loss trigger,
which as implemented, while I think the Smith and Wesson above it perhaps was a big. Here we see really the duality and the statistical nature of these earnings. The earnings edge, when well played, we should have more winners than losers, and the winners should have a bigger
offset, especially with the idea of the trailing stop. Because of the trailing stop, you can get exposure to higher profits while always limiting your losses. And that over the course of time will result in a positive gain on the account.
Exactly.
You had a loss here, but it was immediately offset by a significant gain. And moving forward, here's another one. Here's another example of it.
This is a long volatility.
Yeah, because of the ability to let this thing run. Into 15,000 on this one.
A great example of the benefit of automation, and I don't even have to deal with it emotionally. Basically,
exactly. You're safe from all that whipsaw of emotional thinking, and you get that statistical edge through just a consistent automated system. So yeah, this one turned out really good. The other thing the reason I wrote this is because when I was manually placing these trades, you occasionally make a mistake. I noticed that occasionally I would get one of the wings wrong, or my sizing would be wrong, or my entry price, or even the weekly options. Sometimes you accidentally get the wrong week.
Definitely.
You make these blunders, and you're like, oh shoot, So the automation relieves you from all that.
God knows, I think a lot of people will relate to the stress of, before executing, really making sure you have the right expiration, you have the right strikes. Everything is set up.
And sometimes, you want to do this in the morning before you leave for work, and you've got this little 10-minute window to get all these trades in there. And then something happens, the phone rings right in the middle of it, and you make a blunder, you make a mistake. Humans we make mistakes. We get distracted. We have thoughts in our minds, and
we're emotional beings.
Of course,
we're not robots, but at least robots can help us discipline ourselves in that.
I'm also going to be implementing a spread filter as well. If the spread's too high, we're just going to wait, and it's fine, because you can enter an order into the broker at the price you like and just wait for it to fill.
Yeah.
If the order doesn't fill, then maybe it shouldn't have filled.
Exactly what I was going to say. If
you never had an opportunity to make money, therefore it was better to pass that one up.
Exactly. Yeah. It goes with exactly the discipline of it all. And a lot of cool things to do. I'm sure we can talk for hours of the different improvement that can happen. It's really the root of this automation that can be very useful. So thank you, Buck, for showing me around and talking here. Really enjoyed it. Really happy to see what you've been doing, and happy to see that great performance of yours.
Absolutely.
I feel you're also getting you find this fun a bit, like you're